Good afternoon. My name is Samantha Charles, and on behalf of the Department of Trade, Industry, Competition, the Paper Manufacturers Association of South Africa, and Sawmilling South Africa, I welcome you to a webinar in which 3 speakers will take us through the Africa Continental Free Trade Agreement and how it applies specifically to the timber processing and pulp and paper sector. The African Continental Free Trade Area is the largest free trade area, bringing together 55 countries of the African Union and 8 regional economic communities to create a single market for the continent. The aim is to enable free flow of goods and services across the continent and boost the trading position of Africa in the global market. Just our agenda for this morning. We'll obviously have some opening remarks from Jane Maloney, the Executive Director of the Paper Manufacturers Association of South Africa. We've got Calvin Phume from the dtic, and he's Director of Africa Bilateral Economic Trade Relations. And then unpacking South Africa's trade agreements will be Claudia Furriel, the Director of the African Union Trade Branch for the dtic. We'll have a comfort break around 1 o'clock or 10 past 1, after which Marvin Silawule will, from the Export Credit Insurance Corporation of South Africa, will also give us some information on the export finance insurance solutions. And we'll have again a chance for some Q&A. And then closing the session today will be Tafadzwa Nyazunda, Director for Forest-Based Industries for the dtic. So without further ado, I'll hand over to Jane.
Good morning. Samantha's already welcomed you, but thank you so much for joining us. I would say that arguably we work in the absolutely best sector that it is possible to work in, not just because it's a renewable resource, but because we make a positive contribution to the balance of trade. In 2022, the pulp and paper bit of the sector contributed 12.5 billion rand to the country's balance of trade. This is impressive and it's important. I thought just in opening, I would give you 1 or 2 quick stats on areas where we have seen growth of trade into Africa. The first one is your packing containers of paper and paperboard. So flat packed value add packaging. We've seen a growth since 2018 to now of 350%. On tissue grades of paper, we've seen a growth of 110%. On newsprint, what have we seen on newsprint? 94%. And then interestingly, on value added in the sense of printed books, brochures, and leaflets, it's an incredible increase. According to my stats, we're looking at about 9,314%. This is just to Angola, Botswana, Lesotho, Mauritius, Mozambique, Namibia, Swaziland, Zambia, Zimbabwe. So although we do deal with Ethiopia and with Kenya, Nigeria, when it gets to the West Coast, we compete with the Americas, the East Coast with the Middle East trade blocks, and as you go further north, obviously we compete with Europe. So it is all about your proximity to market, and that is why infrastructure would make such a difference. I was joking the other day at the free trade, at the World Trade Organization, and saying, if only Africa could somehow leapfrog our infrastructure problems and have ginormous drones to transport our goods, then we would truly, truly thrive. So it's exciting for me that the wood value chain is one of the value chains that we are hopefully going to see grow in the future. And Calvin, I look forward to hearing your opening remarks. I apologize, I'm not going to be able to stay for the full meeting, but I'm sure it's going to be a great meeting. Thank you so much.
Thank you so much, Jane. I appreciate your time that you've given to us, even though you are traveling and have other commitments. So without further ado, I'd like to hand over to Calvin, and he will share his remarks on just setting the scene and giving us some context. Over to you, Calvin. Thank you.
Thank you so much, Program Director, and good morning, colleagues. My name is Calvin Phume. I'm from the trade branch within the Department of Trade, Industry and Competition. So today I'm going to give you a scene opening remarks on unpacking the Africa Continental Free Trade Agreement for the timber processing and pulp and paper sector. Ladies and gentlemen and distinguished guests, it is with a pleasure and honor that I am here before you today to this Africa Continental Free Trade Area on unpacking the Africa Continental Free Trade Agreement for the timber processing and pulp and paper sector. So just maybe as a way of a brief introduction, early this year around May, our minister has been requested by Cabinet to develop an action plan in order to communicate the implementation and operationalization of the AfCFTA at provincial level in order to inform the private sector on the benefits offered under this agreement. So what we did, we undertook some outreach workshops to all 9 provinces in the country, and we were targeting at the sector master plans and other priority sectors within those provinces. We worked in collaboration with the provincial investment promotion agencies, as well as the provincial economic development agencies and industry associations to execute this plan. So I must report to you that we had a resounding success on these workshops, where we met a lot of private sector regarding how they can trade under this agreement in order to get opportunities and benefits from trading under this agreement. Today, we gather here to celebrate and announce one of the most significant achievements in recent times. It is with great pleasure that we share this remarkable milestone that our country, South Africa, and SACU in general have accomplished. Through our collective efforts, dedication, and commitment, we have achieved a momentous feat that will shape the future of our economy and bring prosperity to our people. This year in February, SACU is Southern Africa Customs Union, which is one of the oldest customs union in the world. It was formed in 1910. We submitted the tariff offer to the AfCFTA Secretariat for technical verification, and the Secretariat shared with the member states and other regional economic communities to verify if our offer is within the agreed modalities of negotiating this agreement. During the extraordinary meeting of the AfCFTA Council Ministers for Trade and Industry, which was held in Kenya on the 30th May 2023, our offer was approved. So currently, SACU's tariff offer covers 90% of the tariff book, of which South Africa, we are party to, and has been adopted. We are currently in the process of finalization of the gazetting of the SACU tariff offer with our parliament so that we domesticate this agreement to be part of our national laws in order to enable South Africa to start participating in the preferential trade, of which the date will be confirmed once all these processes have been undertaken. Our region has emerged as a key player in this transformative initiative, opening doors to unprecedented growth, collaboration, and development. The benefits and opportunities that the AfCFTA has brought to South Africa are truly remarkable. We will expand our market access, enabling our businesses to reach over 1.3 billion consumers across Africa. This has sparked a surge in trade, allowing our entrepreneurs and enterprises to explore new market opportunities, boost exports, and increase revenue. This historic event marks a significant milestone in our journey towards economic integration and prosperity in Africa. The AfCFTA presents a remarkable achievement, symbolizing our collective commitment to harnessing the potential of trade to drive growth, create jobs, and uplift the lives of millions of people across the continent. With the establishment of this continental free trade area, we have embarked on a transformative path towards increased intra-Africa trade and enhanced economic cooperation. The Assembly of the Heads of State and Government of the African Union, we call them the AU Assembly, in February 2022, they endorsed the African Union theme of the year 2023, acceleration of AfCFTA implementation. The ultimate goal is to accelerate the effective implementation of the AfCFTA in a manner that truly benefits the people of the continent and achieve the aspirations and goals of Agenda 2063. The AfCFTA presents a unique opportunity for the continent to attain economic emancipation, which will lead to job creation, poverty alleviation, improved welfare, and sustainable development. Beyond the policy transformation and reforms, the AfCFTA seeks to ensure inclusivity of women and youth, including youth in the rural areas, development of the small and medium enterprises, and overall industrialization of the continent. The AfCFTA is a flagship project of Agenda 2063 aimed at creating a single African market for goods and services facilitated by free movement of persons, capital, investment to deepen economic integration, promote and attain sustainable and inclusive socio-economic development, gender equality, industrialization, agricultural development, food security, and structural transformation. Today's workshop serves as a crucial platform for fostering awareness and understanding of AfCFTA among our provincial stakeholders, that is, private sector, SMMEs, women and youth-owned enterprises. It is a testament to our dedication as government to ensuring that all regions and communities are well informed and actively participate in this landmark initiative. By providing you with the necessary knowledge and insights, we aim to empower you to seize the abundant opportunities and the benefits that the AfCFTA offers. The advantages of the AfCFTA are manifold. Through the elimination of tariffs and trade barriers, the agreement opens up vast markets for over 1.3 billion people and a combined GDP of over 3.4 trillion. This presents an unprecedented opportunity for our local businesses and entrepreneurs to expand their operations, access new markets, and attract investments. Furthermore, the AfCFTA encourages innovation, fosters competition, and promotes the development of value chains, thereby spurring industrialization and job creation across sectors. South Africa's manufacturing and industrial sectors have witnessed a renaissance. With the integration of regional value chains, we will see a surge in local production, particularly in sector master plans, such as steel and metal fabrication, agriculture and agro-processing, retail, clothing, textile, footwear and leather value chain, automotive and sugar value chain, and forestry. This will not only boost our economy, but it will also create sustainable employment opportunities for our people. Today, as we stand on the apex of this extraordinary achievement, we recognize the immense potential that lies ahead. We pledge to continue our unwavering commitment to the operationalization and implementation of the AfCFTA, seizing every opportunity it presents. Together, let us celebrate this milestone and embrace the transformative power of the AfCFTA. South Africa is ready to lead the charge towards a prosperous, interconnected, and united Africa. I encourage each and every one of you to actively engage in the sessions, exchange experiences, and share best practices. This workshop provides an opportunity for us to learn more from one another, to build networks, to forge partnerships that will propel our continent forward. In conclusion, I would like to express my sincere gratitude to all the participants, speakers, and organizers who have made this workshop possible. Your presence and commitment today reflect our dedication to the economic development and prosperity of our provinces and the entire African continent. Let us embark on this journey of awareness, collaboration, and growth under the AfCFTA. Together, we can unlock the potential of Africa's trade, elevate our economies, and create a brighter future for our people. I thank you so much and wish you a fruitful and productive workshop.
Thank you, Kelvin. Appreciate those remarks. Certainly is very exciting for the sector and for our continent indeed. I'd like to then introduce Claudia Furriel. She will help us or unpack a little bit in a little bit more detail the African Continental Free Trade Agreement. Over to you, Claudia.
Thank you so much, Samantha and Jane, and apologies. I am here, but my camera is not working. It normally happens that way, but thank you again for inviting me to participate in this very important webinar. I think one of the things that we haven't done well enough as government is to really get that message across and really explain not only the benefits of the AfCFTA, which I think everyone would be more familiar with, but really what the agreement entails, how the implementation is expected to unfold. And of course, with the benefits of the AfCFTA, there are some challenges that we will certainly encounter, but there's also, of course, our mitigation strategy to deal with some of these challenges. So my name is Claudia Furriel. I'm the Director for the African Union at the Department of Trade and Industry. I'm essentially the focal point and the coordinator for everything AfCFTA, particularly the negotiations of the AfCFTA. So thanks again, everyone, and apologies for the delay. So essentially the presentation will, as Calvin had highlighted, some of the broader African economic integration objectives, the background to the AfCFTA, what this comprehensive agreement entails in terms of the legal framework, what are some of the key features and benefits, because when we're talking about AfCFTA, we're talking about a developmental approach to integration on the continent. So there's a number of developmental-based elements to the agreement, why the AfCFTA is important to South Africa, again, the challenges and risks of the AfCFTA, the progress in the negotiations and the implementation, as well as, which would be of interest to you, the rules of origin for forestry products in the AfCFTA. And then what we've done is we've just taken one of the chapters, which is chapter 44, and given you an illustration of where some of those market access opportunities are lying in terms of the offers that we received from the countries that have started implementing the AfCFTA. Broadly, the African economic integration objectives. And as you're all aware, this is not something new. It's an ideal and a vision that has been pursued by our forefathers as far back as the Lagos Plan of Action. You also found it expressed in the New Partnership for Africa's Development, also known as NEPAD, which was the Socio-Economic Blueprint for Africa's Development, which was really spearheaded by former President Thabo Mbeki and a number of other NEPAD initiating countries. And more recently, you would find it expressed as a key flagship project of the African Union's Agenda 2063, the Africa We Want, And of course, this is one of the projects in the African Union that is actually having faster movement in terms of implementation, but also one of the key connecting flagship projects in terms of the broader integration objectives of the continent. And why integration is quite important, and I think Jane had also mentioned or alluded to it, is we're dealing with 55 countries in the continent, many of which are landlocked, different levels of development, different economic scales. And in order for Africa to compete more effectively globally, we need to start trading with one another as well. So you're dealing with different levels of economic development, essentially landlocked countries. As Jane mentioned, you have West Africa trading a lot with the US, you've got North Africa trading with Europe and so forth, and not as much or the same level of trade taking place amongst African countries. So integration really is looking at overcoming these limitations. That, of course, in terms of how the continent was structured, was really established under colonialism with the objective of moving our raw materials outside of the continent instead of that infrastructure connectivity between our economies to support trade amongst African economies. What is the key feature of the AfCFTA is that, and I mean, if you look at a lot of our regional economic communities and the trade they're in, trade liberalization or tariff reduction specifically doesn't necessarily support economic development, sustainable growth, etc. So when we're looking at the AfCFTA, we don't just specifically look at market liberalization or at market integration, which is obviously what a trade agreement does. But quite importantly, our approach to the continent is a development integration approach. So with the understanding that tariff reductions are not going to necessarily support Africa's economic development, we have to deal with non-tariff barriers and also specifically cross-border infrastructure development, but also about beneficiation at source so that we can start boosting our productive capacity in our economies. And in how you do that, of course, is through rules of origin that support Africa's productive capacity in terms of where we have a comparative advantage and in areas where we can really attract investment into our productive capacity for companies to be able to benefit from the AfCFTA. So just giving you a snapshot of intra-Africa trade, if you think of, look at it into perspective, that 17% of the world population comes from Africa, yet we only contribute 4% of global GDP, 2% of world manufacturing. And with our world share of world trade only being approximately 3%, doesn't really attest to the growing population in Africa with a young, boosting, thriving population in terms of our contribution to the global economy. So while we have intra-Africa trade standing at sometimes between approximately 16 to 18%, you compare that to intra-Asian trade, which is about 55%, North American trade, which is 49%, and EU trade, which is 63%. It shows that a lot more can be done for us to start trading amongst each other. However, when we look at intra-Africa trade, and just keep in the back of your mind that most of intra-Africa trade at the moment is amongst regional economic communities. So South Africa's trade, as Jane had mentioned, is largely with our neighbours in SACU and in SADC, and you would find the same picture emerging of East African trade within the East African community, West African trade within ECOWAS, North African trade within the North African configuration as well. But it's about now getting these regional economic communities to start expanding their trade beyond their REC configuration. So as much as these figures are looking slightly bleak compared to trade figures outside of the continent, some of the interesting facts is that in terms of African markets and the importance of African markets to African exporters, 22 African countries account African countries as their main export market. Again, keep in mind that it's mostly within regional economic communities. 5 of these counted as their second most important market, but of course over 3/4 of intra-Africa trade within regional trading blocks. But interestingly, while most of our exports to the rest of the world are raw materials or commodities, intra-Africa trade has got a higher percentage of value-added manufactured products. Next slide, please. So just a little bit of a background to the AfCFTA. The negotiations were launched in South Africa in June 2015. Currently, we have 54 out of the 55 AU members that have signed the agreement. This doesn't mean that they're state parties, but signing the agreement is an indication or intention to ratify the agreement to make it part of your domestic legislation. The only country that hasn't signed is Eritrea. But I think this is more of a technical capacity issue, and there are indications that Eritrea would also sign the agreement as soon as they are able to do so. Currently, we have 47 countries that have ratified the agreement. This means that they are now considered to be state parties, and they have rights and obligations in respect of the agreement. South Africa became a state party or deposited its instrument of ratification back in February 2019, and the agreement entered into force on the 30th of May 2019 after the required threshold of 22 ratifications had been achieved. And if you think of 2019 as starting with 22 or entry into force of the legal framework of the agreement, and that's exactly what it meant. It's the legal framework entered into force, and that we already have 47 countries that have ratified since then. You can notably see the political commitment behind the AfCFTA and the implementation of the AfCFTA to support economic integration in the continent. So following the entry into force of the agreement, and this is where sometimes the messaging becomes unclear from the AU side, is that we launched the operational phase of the AfCFTA in 2019 in Niger, but that really was to launch the entry into force of the legal framework of the agreement. But with that came all the requirements to establish the AfCFTA institutional structures, the AfCFTA Secretariat in Ghana, for example, and to establish all the committees and subcommittees that would be responsible for monitoring the implementation of the agreement specifically. Subsequently to that, you may recall that in December 2020, during the 13th Extraordinary Summit of the African Union, the heads of state launched the operational or commencement of preferential trade under the AfCFTA on the 1st of January 2021. Then, of course, the question became, can we start trading? And the answer was no. The launch of trade on the 1st of January 2021 meant that once all member states had met the necessary legal requirements to start preferential trade, and of course this meant customs documentations, having an adopted tariff schedule, and having gazetted their offers, they would be able to start trading preferentially. But the significance of the 1st of January 2021 is that while we have different tariff phase-down periods, which I'll get into, it means that whenever you start implementing preferential trade under the AfCFTA, your baseline is the 1st of January 2021. So the later you start implementing, the bigger and deeper your cuts are going to be in terms of tariff reduction to catch up to where we are in terms of the implementation year. So I hope that makes sense. And then in terms of the legal architecture of the AfCFTA, and again, it's one of the most comprehensive trade agreements we've ever negotiated in the continent. As you are aware, we have a number of, in the REX, we have a number of trade protocols or preferential trading arrangements. We have trading services protocols, so we engage on trade services. But the AfCFTA really looks at your, or if I can call it traditional trade, but also your new generation trade issues. So just in terms of what the scope of the AfCFTA includes, it would be the main agreement or the agreement establishing the AfCFTA, which encompasses all its protocols, annexes and appendices to the agreement. Specifically, you have the protocol on trading goods, which has 9 annexes. And that deals with your tariff concessions, your rules of origin, customs cooperation, trade facilitation, non-tariff barriers, technical barriers to trade, sanitary and phytosanitary measures, transit and trade remedies. The next slide, please. Protocol on trading services, which is basically looking at the 5 priority, for now, the 5 priority services sectors, which is financial, tourism, transport, communications, as well as professional services. In the first round of negotiations, it will also look at regulatory cooperation frameworks. And in the second round of negotiations, we will look at the remaining 7 services sectors, and quite importantly, distribution services would be a high priority for South Africa in terms of getting our products across the borders. A protocol on rules and procedures for the settlement of disputes, and this is quite unique to the AfCFTA. If you look at the SADC trade protocol, for example, if we have trade disputes, and of course we use diplomatic channels and bilateral means to try resolve trade disputes, but when those fails, we have no recourse in terms of resolving legally these trade disputes, other than going to the WTO, which is really quite costly. So for the AfCFTA, we have what we call like a mini WTO dispute settlement arrangement with a dispute settlement body, and it will include an appellate body as well. The phase 2 negotiations that we are now engaged in as well is in terms of competition policy, intellectual property rights, investment policy, women and youth in trade, as well as digital trade. So some of the key features of the AfCFTA, and apologies if I'm rushing through this, but it's really difficult to cover all that is AfCFTA into 40 minutes. So we're happy to engage with colleagues after this webinar as well on any specific questions or queries that you may have on any specific areas of the AfCFTA. So just in terms of the key features of the AfCFTA, what it really does, the agreement sets out a framework for tariff liberalization across Africa, and trying to look at the harmonization of trade-related rules to encourage greater flows of intra-Africa trade and intra-Africa investment. And this because when you're talking about integration and the linear approach that the Abuja Treaty envisaged from regional free trade areas into customs unions to an African economic community, the best way to really try to look at how we enhance intra-Africa trade is trying to harmonize trade rules, because we are not a customs union yet in the continent. So where you can find some alignment between trade rules, that is the best way to try and encourage these greater flows of trade and investment. But quite importantly, what it does, it builds on the progress that has been achieved at the regional economic communities. So the AfCFTA at this stage does not replace the trading arrangement we have in SADC. It does not replace the trading arrangement that the EAC has, or West Africa has, or North Africa has. So we will preserve those regional trading arrangements, and South Africa and SACU, for example, will continue to trade with SACU members and SADC members under the SACU agreement as well as the SADC trade protocol. So when you want to now export to Mozambique, for example, to Zimbabwe, you would continue to export and trade under the SADC trade protocol arrangements, not under the AfCFTA. Another key feature is reciprocity. We are not going to give something for not getting anything in return. So reciprocity is quite important. But what is a key feature in terms of the AfCFTA, in terms of, again, taking into account the different levels of development in the continent and the different capacities for countries to participate in the AfCFTA is what we call variable geometry. So it allows countries to join when they are ready. So you will see that we have 47 countries that have ratified the agreement, but certainly not 47 countries that have started preferential trade under the AfCFTA. So this gives you an element of flexibility in terms of joining or starting implementation. But again, the later you start, the bigger your tariff cuts are going to be. We also have different tariff phase down periods for least developed countries and non-LDCs, so your developing economies. But of course, when you're talking about a customs union configuration, you would have a mixture of least developed countries and developing countries, including in SACU and West Africa. So you can then decide whether you adopt an LDC period of liberalization, or, for example, Egypt would have to implement their tariff cuts in a shorter period. The benefits of the AfCFTA, I think Calvin has also basically introduced in his opening remarks, but it's really about eliminating tariffs, quite important, eventually over a period of time, and with the different tariff phase down periods, both for the 90% tariff offers that we are starting with, plus then the remaining 10%, which would be 7% sensitive products that would be subject to liberalization, but over a longer period of time. And the 3% excluded products, you would have 97% of your tariff books or tariff lines at zero by the year 2035. So that is the period of liberalization for the entirety of the 97% coverage of the tariff books, is that by 2035, 97% of our tariff lines would be at zero duties. Of course, we have rules to manage non-tariff barriers. And importantly, when we're talking about moving our goods and services across the borders, it's a cooperation on customs, trade facilitation, and transit, which is quite important, while also ensuring the required necessary health standards that need to be applied as well through SPS measures and technical barriers to trade. Key feature or benefit is obviously enhancing the legal certainty and predictability of market access. So at the moment, it doesn't mean that South Africa doesn't trade with other parts of the continent. But once you do go invest, or when you were investing or trading with other parts of the continent, it would be either on WTO basis, and if you were investing, you had no recourse to any dispute settlement process if something doesn't go right. And of course, we've seen some cases in the continent, for example, with MTN in Nigeria, where some things haven't gone exactly according to plan. So the legal predictability of this legal framework is quite important. And of course, the process for the resolution of trade disputes, which we would use in the event that some of the bilateral arrangements do not materialize in terms of trying to resolve disputes, you would have recourse as a country to go through the dispute settlement mechanism. So when we're talking about some of the rules that we have in terms of rules of origin, etc., it certainly aims to enhance industrial development and employment in the continent, and also incentivize investment in the continent through new market access opportunities and the opportunity of having a larger regional market in the continent. So the successful implementation of the AfCFTA ultimately aims to have enhanced diversification of exports, increased African productive capacity, growth, investment, employment opportunities, and economic inclusion by bringing in a specific protocol on women and youth in trade. Just in terms of some of the stats that are available, the projections from the World Bank is that we could really boost regional income by about 7%, and increase income for about or lifting about 30 million people out of extreme poverty by 2035. And again, this is based on the complete tariff reduction of 97% at zero duties by 2035. In terms of the strategic importance of the AfCFTA to South Africa, if you look in terms of our major export destinations, obviously the rest of the continent is quite an important market for South Africa. The EU, China as well, which account for about 62% of South Africa's total merchandise exports. But when you start looking in terms of the importance of Africa to South Africa, we account for about 21.8% of total intra-Africa trade, both in terms of imports and exports, and 22 or just under 23% of South Africa's global exports over the last 2 years were destined for African countries. If you break that down even further, and again, the importance of the AfCFTA is that just under 90% of those figures, or those exports to Africa, were in SADC member states. So it's in Southern Africa. And if you break that down even further, some of the key SADC markets where most of our exports are going to predominantly are Botswana, Mozambique, Namibia, Zimbabwe, and Zambia. So our immediate neighbors, hence emphasizing the importance of infrastructure development across the continent, so that we can expand those exports more easily to other regions in Africa. If you look at the composition of our exports to Africa compared to the rest of our global export market, just under 60% of our exports to Africa were manufactured products compared to 33% to the rest of the world. So again, the opportunities for manufactured or value-added exports into the continent is a high priority for South Africa. Of course, with any trade agreement, there are going to be mutual risks and challenges and benefits. Some of the ones that we have identified, for example, is the slow implementation of the AfCFTA in terms of preferential trade. As I mentioned, 47 countries have ratified the agreement. Out of those, 42 have adopted tariff offers, including SACU, South Africa, that had as Calvin mentioned, our tariff offer covering the 90% of the tariff book was approved in May 2023. And out of those countries, only 9 state parties have started implementing preferential trade on a limited number of products. We are now finalizing the legal modalities, as Calvin indicated, with SARS. We have already issued a letter from the Minister of Trade and Industry to the Minister of Finance to gazette our 90% tariff schedule. And we expect that that would be published by the end of October this year at the very latest. In terms of the 5 priority sectors of the trading services commitments, there's been no indication yet of any member state that has started implementing those services commitments. There are 22 members with approved offers. South Africa is not one of them. South Africa's services offer is going to be tabled before Cabinet, hopefully before the end of this year. There were some challenges with the telecoms commitments, but that has been finalized, and it should serve before Cabinet, where we could start implementing our services commitments. But again, the importance of reciprocity. We will not start implementing or allow countries that have not started implementing to benefit from our market if we are not able to benefit reciprocally from their market as well. And of course, there's been a delay in finalizing the outstanding 10% category of the tariff book, which again was the 7% sensitive products and the 3% exclusion list, so that we could finalize our schedules on the complete 100% coverage of the tariff books. There's also been delays in finalizing the outstanding rules of origin on the 2 critical sectors of automotives and clothing and textiles. So these are obviously critical sectors for the continent, and without agreed rules of origin on certain products, you would be able to trade, but not preferentially on those line items. So we would trade on most favored nation principle under the WTO, but no preferential trade on those product lines specifically. And of course, even on these sectors, you will note that we have no common position among SACU member states on these outstanding rules, which further creates a delay in terms of a regional approach to the finalization of these outstanding rules of origin. Next slide, please. Another critical challenge or risk is supportive infrastructure and delays at the borders. Of course, we've spoken about inadequate cross-border infrastructure to facilitate the movement of goods and services, and also the delays at the borders, a number of our trucks sitting at the borders for days or weeks, and the lack of capacity and training of customs officials by other members. South Africa is already ready and has been undertaking customs training for customs officials, but the importance of other countries being ready to implement their commitments as well. And this is also linked to the risk of transshipment of products from other countries. So products that come through one of the AfCFTA member states from a third party that don't necessarily meet the required rules of origin for preferential trade, that would find its way into our markets under preferential treatment. And then, as Calvin mentioned, a lack of awareness and understanding of the AfCFTA, insufficient awareness, not only by our bigger corporates, but also small and medium enterprises, women-owned enterprises, to understand where they could fit into the AfCFTA and how they could benefit from the AfCFTA as well. And just generally a lack of understanding of the low technical content and market access opportunities, what it means if the AfCFTA we start trading preferentially, where those specific opportunities lie, what are the applied tariffs, and what are the applied rules of origin for those products. So, of course, there are some mitigation steps that we are undertaking to deal with some of these challenges, and the importance again of investment-led trade. Investment-led trade to support the development of regional value chains and to support African industrialization and infrastructure development. Investment-led trade will help you, once you're in that regional market, to be able to trade better and also to develop infrastructure to get your products across the borders. We continue to engage with SACU and other member states on rules of origin that will support Africa's industrialization objectives. And of course, as you know, if we have less stringent rules of origin, particularly on those product lines where we have a competitive advantage or the potential to supply the continent, there's no incentive for anyone to invest in the continent if we are making it easier for inputs from third parties to benefit through the AfCFTA. The gazetting of our SACU tariff offer, originally expected by September 2023, now end of October 2023, and we would then be able to start trading preferentially with those state parties that are ready to implement as well. We continue to engage with SARS to strengthen enforcement mechanisms at borders posts to ensure transshipment, as well as to ensure compliance with the required rules of origin. We've embarked on the provincial outreach and awareness workshops. We're also working with SEZs to create awareness on the AfCFTA and the advantages of exporting under the AfCFTA. And we're going to also start targeting a number of districts to get the information across to SMMEs as well. We've also developing an implementation plan for the AfCFTA, which would include the establishment of a national implementation committee and a targeted export strategy for implementation. And really, this is going to be a mixture of government, agencies, private sector, etc. So we can coordinate the implementation where we can maximize opportunities, but the minute that there's also some challenges, that we can identify those and mitigate them as soon as possible. Just in terms of the AfCFTA progress, in terms of negotiations and implementation, as I indicated, 47 members have ratified the agreement, 47 have submitted tariff offers, and of those 42 have been adopted for provisional implementation based on their compliance and verification with the agreed modalities for tariff liberalization. I have included there a link for the AfCFTA e-tariff book. You would find all 42 tariff offers that have been approved on this link, but of course, not all of these are currently being implemented. I think we've already spoken about South Africa's gazetting of the its tariff offer. South Africa, as part of SACU, with Lesotho being an LDC, we will be implementing our 90% tariff offer over a period of 10 years. Again, this is applied retrospectively from the 1st of January 2021 in terms of the operational date for preferential trade. So, of course, when we start implementing this year, we would be implementing on the basis of year 3 of AfCFTA implementation dates. And the final implementation and final tariff schedules will be effected once the remaining 10% of tariff lines and the agreed rules of origin have been finalized. There is also a supportive initiative, and sorry, I know that I'm taking quite a bit of time. There's a supportive initiative that has been introduced by the AfCFTA Secretariat, which is known as the Guided Trade Initiative. It was a pilot project that started in October 22 with state parties that had already adopted tariff offers and that had already gazetted their tariff offers. So there were 7 at the time, and it is open to all state parties with verified and adopted offers. And of course, there's been generated interest now to over 30 state parties that have joined the GTI, because while it doesn't replace the AfCFTA institutional structures and committees, the legal committees that are established under the agreement, it really aims to address some of the challenges and also make those business-to-business connections quite speedily in terms of moving our goods across the borders and to start implementing trade under the theme of accelerating the implementation of the AfCFTA. So what you would ask is, which are the 9 countries that have started implementing preferential trade? And of course, South Africa is not counted until we gazette our offer and start implementing tariff preferences. So currently we have Algeria, Cameroon, Egypt, Ghana, Kenya, Mauritius, Rwanda, Tanzania, and Tunisia. So you will notice that 2 of those countries are SADC member states. So we would not, and that's Mauritius and Tanzania. So those countries we would still continue to trade with under the SADC trade protocol and not under the AfCFTA. So essentially there are 7 markets that we could start trading with under the AfCFTA. It doesn't mean that other countries, it's going to stay at this number. Other countries, for example, such as Nigeria, are also in the same process as South Africa of gazetting their tariff offer. So you will start seeing that number of countries that start implementing preferential trade increase quite quickly in the next couple of months. In terms of where we are on the rules of origin, as I mentioned, we have the autos and clothing and textile sectors are outstanding. Currently, we have just over 92% of agreed tariff lines with the rules of origin. 7.7% of these tariff lines remain to be finalized, and we expect that these could be finalized before the next summit in February 2024. In terms of the agreed rules of origin for forestry products, if you look at chapters 44 right through to, I think it's chapter 49, you will see we've included in the slides the agreed rule of origin for those specific chapters and headings, and you would see that mostly in chapter 44, the agreed rule of origin is wholly obtained. So all of those materials or products must be sourced from the continent. And when we say wholly obtained, it doesn't mean that it has to be wholly obtained in South Africa. It can be wholly obtained from any of the AfCFTA state parties. Chapter 45, we've also agreed the agreed rules of origin, as well as chapter 47 and 48. And again, the presentation will be shared with you so that you're able to see what the agreed rules of origin is for that. If there's any other products of interest, we're happy to share the current updated rules of origin appendix that specifies all of the agreed rules for the various products. Just in terms of market access opportunities, we've done an illustration just on chapter 44 in terms of those 7 countries that are non-SADC countries, where those opportunities could lie. And you would notice that for Algeria, there are some of the chapter 44 lines that have been included in their 90% category. And then you will see a number of lines, I think 177 product lines, for example, that are in the remaining 10% category. And then, of course, that we don't know which products are going to be included in what we term the 7% category of sensitive products that would be liberalized over a slightly longer period of time, or which of these products would be in their exclusion lists. So the importance, again, of finalizing the 10% so that companies have an understanding of whether some of these products are going to be liberalized or not is quite important. With Egypt, you've noticed that, yes, they have included chapter 44 in their 90% category as well, and they have about 45 lines that are currently in their 10% category, and we don't know what the allocation of those would be. The same with Cameroon, some products included in the 90% and about 148 that are in the 10% category or not included in the 90% category, which is currently being implemented. Ghana the same, as well as Kenya. Rwanda as well. So there's some lines in the 90% and others that have been excluded at this point until pending the finalization of the 7% and the 3% categories. This information, again, is available on that AfCFTA e-tariff book portal. So you would be able to go check for any of these countries, including those that haven't started preferential trade, whether some of the products in chapter 44 right up to chapter 49 have been included, and in which category they've been included for implementation of the AfCFTA. Sam, I'm going to leave it at that, and thank you very much for your attention.
I'm Marvin Silawule, an economist at the Export Credit Insurance Corporation, and I would be taking you guys through what the ECIC does as an ECA, some of the products that we have and that we've recently launched, the risks that we've covered, and then just to identify, based on the research that we have done, I think we will publish our research report sometime throughout the course of this year or next year, and it's on the forestry sector. And it highlights some of the opportunities that we have observed on the continent and how South African businesses and exporters can take advantage of the opportunities through the African Continental Free Trade Area. And I'll just conclude with what the master plan has done and what it aims to do for the sector itself, and how the ECIC can propel that for our exporters. Just as an overview, our mandate is to facilitate export trade and cross-border investments between South Africa and the rest of the world, with Africa being our first point of contact. We are the ECIC, and we are 100% state-owned by the DTIC, and we provide cover for South African rand, US dollar, and euro denominated transactions, and we are regulated by the South African Reserve Bank. What is our key value proposition? We facilitate availability for funding export trade. We provide capital relief to reduce that cost of funding. We do facilitate access to markets. We facilitate deal origination. We're also a supporter of small and short-term transactions. We do enable diversified sources of funding. As an insurer, we have flexible underwriting terms, and we have a very great track record of our claims and payment history. The products that we have as an insurer or as an ECA, we do provide the traditional export credit insurance, which covers for corporate finance and project finance transactions. We also provide investment insurance, and this is insurance cover for South African businesses that are looking to acquire equity in foreign countries. We also support small and medium transactions, and these are transactions with the transaction value of up to $20 million. We provide bond insurance, and these are some of the transactions or in the short-term space that we've recently entered into. We also provide working capital insurance, and the most recent product that we have launched is the trade credit insurance, and we provide both commercial risk insurance and political risk insurance. What are the typical risks that we cover or risk events? As an ECA, we provide cover for political risk events and commercial risk events. And some of these political risk events are expropriation of assets of the businesses in that foreign country, any discriminatory change in law, currency convertibility, war and civil disturbance, breach of contract, protracted default, and terrorism and piracy on a case-by-case basis. And then commercial risk events, these are just events where we see non-payment by the borrower or the buyer. And these include insolvency and protracted default. And then I'd just like to zoom in quickly on the forestry trade. And these are just extracts from the paper that we will, the research paper that we will release over the course of this year or next year. And this is some of the data that we have gathered just to try and understand what are the imports and exports looking like on the continent. And on the left graph, I've distributed imports by region. So we have East, West Africa, Central Africa, North Africa, and Southern Africa. And I think it's quite striking to see that North Africa is the largest importer. And they have an import value of more than about $7 billion. This is then followed by Southern Africa, East Africa, and West Africa, which they import equally the same. And Central Africa is the lowest importer of forestry-based products. And this is primarily driven by the fact that Central Africa is one of the biggest producers of forestry-based products. Countries such as Cameroon, Gabon, and Congo have a lot of forestry or hectares that cover a lot of forestry. But the total import value across the continent is estimated at about $14 billion. So this highlights a trade gap. And then on the right graph, we have forestry-based product and the exports. And yeah, the biggest exporter is Central Africa and Southern Africa. And the biggest drivers of these exports, or by country, we have Cameroon, Gabon, Congo, Equatorial Guinea, and South Africa. as the top 5 largest exporters, and they have, or the total combined value for the continent is estimated at about $5.3 billion. So this does highlight an export opportunity because there is a bit of a trade gap here, and it's quite steep if you're looking at imports of $14 billion and exports of only $5.3 billion. If we zoom into these graphs, what we've done here is we've just looked at what are the most products that are being imported from the forestry sector, and what are the most products that are being exported by the forestry sector. And on the left chart, we have top imported products, and coming in at number 1, we have paper and paperboard products that are being imported. This is followed by printing and writing papers, sawn wood, and uncoated printing and writing papers. And this just highlights that there is a manufacturing or processing gap on the continent, as most of the products that are being imported are processed products, or products that have slightly or higher value addition. And then from an export point of view, on the right chart, most of the products that are being exported is industrial roundwood, sawn wood, dissolving wood pulp, and veneer sheets. And these are basic wood products that have little to no higher value addition, so i.e. they're not processed. And it also just highlights the conversation that is being had across the continent, across different sectors, that Africa is the biggest exporter of primary goods, but also the biggest importer of processed goods. So this shows an opportunity for processing plants to be established where there is a competitive advantage in the forestry sector, so especially in Central Africa and some of our neighboring countries, Eswatini. So these are the key things that we have picked up on our end. Then the opportunities, as a summary, as I mentioned earlier on, there is a large gap to increase manufacturing capability, and this is to help reduce the imports of processed products. There also appears to be a general shortage of timber in East Africa, and the countries that we've identified were Kenya and Uganda, and this is where some of the South African exporters can take advantage. There's bio refinery and transformative technologies in the forestry sector, and obviously this provides a strategic use for wood fiber, and Africa's population is growing very fast, and it will be deemed as the fastest growing population by 2050. So this then causes a need for more packaged goods, as the smaller goods or more agricultural goods are being exported and imported across the continent. So packaged goods will definitely be an eye-opener, and this is where some of our South African exporters can take advantage. And for ECIC side, we have received some client requests, and most of the requests have been coming from clients based in Uganda, where they're looking for machinery or equipment for Uganda's timber sector. So it seems as though the opportunities are pointing towards East Africa. And on the Central Africa point of view, it's just to establish more processing plants to strengthen that manufacturing capability. Then, in conclusion, through the Forestry Master Plan, there is a need to increase plantations and grow more forests. This will increase transformation, attract investment, and attract small business participation. And this will then encourage our local businesses to be more competitive in the export market. most of the players in the value chain across the forestry sector can take advantage of the African Continental Free Trade Area, and they can come to us as an ECA to help mitigate some of the risks that are inherent on the continent. And this is through the products that we do have on offer. We do have strong relationships with our African countries and also our local banks in facilitating cross-border trades or export trades for our small businesses, medium-sized businesses, and our generally large businesses. But I do thank you for participating in this webinar. Thank you.
Let me start by thanking everyone by availing themselves to come and listen to the team from the DTIC and ECIC. I'm a bit worried that no one asked a question, so I don't know if we did indeed communicate something, or maybe we need to repeat this webinar. But nonetheless, thank you very much for attending the webinar, and also thanks to all the speakers that have taken out their time. This has come as a result of a number of queries that we've had at the sector desk with regards to access to markets and having companies that want to export their products outside South Africa. So we felt that there is this agreement that has come into place and that is happening, and quite a number of our members missed the physical workshop that were being rolled out in the provinces, and hence we had to come up with this online. So like Claudia and Calvin has said, feel free to contact them. We're going to share their contact details if you need to engage further. The good thing is they've really then went and further explain where the opportunities are in this sector. So I would like to agree with James. She said that we are working in a very important sector, and I think you can attest to all of us. You all work up on furniture, and you are seated on furniture, and you're possibly writing on pulp and paper, and your roof, there is timber there. So yes, we are everywhere and present in people's lives, and we will remain a very important sector. So thank you once again. There was presentation from all the sectors. I've seen names from pulp and paper. I've seen names from sawmilling, board manufacturing, furniture. I've also seen some colleagues that have registered from commercial banks. Thank you for taking part in this, and also some private equity investors. They've also joined the webinar. So thank you once again, Sam, for the great work that you are doing. So he did, and thank you, ECI, for the research that you are doing. We'll be looking forward to that. Under the Furniture Master Plan, we are busy putting together an export strategy. And we had talked about this with the Sawmilling SA about the need to craft an export strategy for the sector. So I'm happy that you have started to do the research. So that covers the groundwork that we need to be done. And I think what we will just then do is to do the action plan to say what starts when. We hopefully that we will have another webinar of this nature just to give you the information and make it a little bit more focused. Today was great. You didn't ask questions, but hopefully you will then ask questions then, and that you will contact my colleagues should you need any assistance. I think this is all I have from me. And thank you very much for responding, PAMSA and Sawmilling SA for paying for this webinar. Thank you once again.